All right. It is, it's the last Friday in October, October 28th, 2022 for the record books.
Yep.
Here we are. It's like we're into it. We're into fall. It's spring. No, it's fall back, I think, next week.
Oh yeah,
Right?
that's right.
Yeah. We got American Thanksgiving coming up,
hmm
Remembrance Day, and then right into the, I dare not say, Christmas. Every parent's
Yeah,
worst nightmare.
you forgot the biggest holiday of the year, which is Halloween, Candy Day,
Oh,
coming up on Monday.
Halloween. Yes, I'm delivering kids all over the place to Halloween parties this weekend. So yes, I
Makes
will be.
sense.
I'll be breaking out the old He-Man costume to deliver to hand out candies. You can imagine what that looks like. Actually has like sewn in abs to it, so I like that part.
That
I
part's good.
digress. Let's get right into it. We got to make it. We got a bit of a schedule today, so we're gonna zip through this.
Sure.
Well, let's start with as we normally do.
hmm
Dow closes 800 points higher on Friday. Registers fourth straight week of gains. Hey, beats the
Gotta be.
alternative.
God, it does beat the alternatives. Good news.
Yeah.
One of the things that I commented a little bit on Rosenberg's research I read this week, but just to give you context, and as I'm sure we've talked about it this year, but we've had, I think this is probably day 35 or 36, where we've had more than a 400 point up move in the Dow. It's still down 4,000 points, but we've had kind of 36 400 point move up days this year. If we look at the previous decade, there were 21 for the whole decade. So it's been a year of volatility, big swings, and so now we're left to see, is this real, or is it continued short covering? So that's what I'd say about that.
Yeah. Well, at least we've made the first step, let's say, to a long journey back, right?
That's it.
So wise. So wise on a Friday. Okay. Well, what'd you get up to this week, except for this and that?
Holy cow, there's lots
There
going on
was
this week.
lots.
Because obviously Bank of Canada was, I'd say, the biggest news of the week. They raised rates on Wednesday. As of last week, when we were talking, it was something in the neighborhood of 98% priced in that they were going to raise 75 basis points, and they raised 50. So a surprise on the lighter side of things. Obviously, the pivot folks say that it's a pivot. Certainly, as I read the monthly data, the NPR that they release, they talked a lot more about the economy and thought that it sounds like the Australian Central Bank a couple weeks ago did the same kind of thing. I have many people asking me about rates and thoughts and things like that. And so that was actually a pretty big surprise that they only went 50 basis points this week.
Okay.
Yeah.
We get up to anything in their portfolios this week, or stand a pat?
Yeah. Yeah.
Yeah.
Yeah.
What a
We did.
couple things.
It's exciting. So
Hmm.
we had coming into Monday, we had the Chinese market down pretty hard. Um, they wrapped up their kind of I forget what their forum where where Xi was discussing the plans for the future, and sounded a lot more closed. And he'd really kind of fired anybody in the cabinet that were outsiders, will say, that seemed a little bit more pro growth, so to speak, I guess is how the market interpreted it. So the Chinese internet ETF that we have some exposure to, KWeb, opened down significantly, something like 20% or so on Monday. So I added to positions on that. The stock is up about 10% from where we bought it. Similar from the perspective is the tech. So if you've been following along in the dailies, I said, Facebook, Google, um, uh, and Microsoft Microsoft, they all kind of came into this quarter without revising. And so, I've been talking probably for 3 or 4 months now, just talking about the companies that provide forward guidance. They don't get hit quite as hard. So when I started adding to Intel, which was I think probably 3 months ago or so, they kind of guided early, stock came down, and so we started to add to it there. And Intel released their results today, and the stock was up 10%. So Facebook and the others didn't do that, and so their stocks got hit pretty hard. Amazon as well was down 20% overnight, but I didn't buy any of those ones. We added to Meta, Facebook on its correction 2 days ago, I believe. So, look, you look at the trajectory of the business, the average daily users. I think kind of the underlying of where it's going and where and what it's going to. I still believe that's part of the future. Read a lot. Or I'll put out a piece on robotics this week and just kind of the future of technology. And so I still think Facebook plays a major part in the future. I know it's called Meta. So we added to those two positions this week.
Gotcha.
Yep.
All right. Well, let's roll on to the Ben chart section.
All right, let's do it.
What interesting nuggets do you have for us this week?
Yeah. Let's do it. I'm gonna use this one, I think, every week until it makes sense. This first one.
Okay.
And and then we'll go through some of the other ones. But this is the conversation that I have repeatedly with obviously clients, and I get calls from accountants and other centers of influence that are asking about the economy and the markets. And I think when we read the central kind of the news of the day, you kind of get those two things overlapped and interchanged, where the markets and the economy are the same thing. They are interconnected, but they move at different times. And so, as I've been saying probably for a month now, I'm probably been using this chart and saying, the markets tend to bottom as the recession tends to start. And so as we think about that, obviously GDP in the US came out this week, which was slightly better. So slight acceleration, but I think that was mostly currency related. And then if you look at the next couple of quarters, they do look like they'll be negative, particularly in the US and likely in Canada as well. So, when we think about stocks and assets that we own, I continue, as I've been saying for months, as we're getting closer and closer. And as I said in one of the dailies this week, maybe Microsoft and Google and the majors have finally capitulated. And if they have, that's a great sign. So certainly those will be things that I'll pay attention to over the next little while. But I thought this was a great reminder of how the economy and the markets move together.
Really good. Really good one.
Yeah. So lots of attention continue to be driven towards oil and energy, and I think energy is going to play probably a pretty major part, at least in Europe, for the next 12 months. And so, I think it's still worth bringing up to think about where the major reserves are in the world. Venezuela, Saudi Arabia, and Canada is one of the major providers of energy globally. So I think it's important just to think about how that's going to play out, where that has an impact on our economy. But Canada continues to be in a good position going forward.
Great.
At least on the energy side of things. So I'll hit on another one just about the Canadian housing market. But first, I thought this was a great visual. And so this is population growth in the world. Obviously, that number has continued to go down for 60 years. And so we get kind of a 1%-ish population growth right now. And so, as I've talked about, the central banks kind of continue to lean on this employment and demographics, and they're like, the employment market is tight. Well, the employment market is tight because there's less people working and there's less people. So as we think about how this evolves, and I think about what they're doing and why they're tightening rates and using kind of employment as the reason for the rate tightening. I try to take this with a grain of salt and think about what this means, not only from a interest rate perspective, but also what does it mean for how things work going forward. And this technology robotics theme that is, I think, going to play a major part in the next couple of decades, will be more and more important as we think about it. So I thought this was an amazing visual just to see like how dramatic it's been over the last 60 years.
Definitely. That's a great one.
Yeah. So this was a great chart that I saw pop up this morning, and again, the headlines still seem to say that it's super expensive to ship things, and this kind of these issues with shipping and cost and inflation pressure based on the supply chain. This is the Shanghai Freight Index. And obviously, as you know, you can see that we're back down to below our long-term average, back down to kind of 2011 levels. So, kind of that narrative that we see isn't necessarily true. And things have come down, inflation's starting to come down. But I thought this was a really interesting visual just to think about how this is going to play out. And, this was a huge inflationary pressure over the last couple of years, and now we're seeing it come down the other side.
Gotcha.
Yeah. So hit a couple more, and then we can wrap up. But as I kind of bookend with the oil and energy, in Canada is in a good place from that perspective. This was UBS put this out this week, which is what real estate markets in the world are in or at risk, I'd say. And so as you can see visually, top of the chart here is Toronto, and Vancouver's in the top 10 as well. And so when we think about where they want to go from a rates perspective, and I know that all the CEOs of the bank this week we're having a meeting with the Bank of Canada just to talk about rates and pressure and what they're seeing in the system. And as they've come out with quarterly earnings, they've talked about putting aside more capital for reserves and loan losses and things like that. So this continues to be something that I think we need to watch, but just a visual to see what's happening in Canada right now.
Great.
So hit on two last ones here. One on Bitcoin. We haven't talked about Bitcoin in a while. The last one on electric vehicles. So this is an interesting look just about global M2. So the white line that we would see here is money going into the system essentially, and then the blue line would be the price of Bitcoin. And so if you look about and think about this, as money's flowed into the system, assets have accelerated at certain levels. You can apply this to kind of almost any asset class. Bitcoin actually has a slightly more alpha when you look at it this way. And so, as M2 shrunk, so as the price, if you believe that M2 starts to expand again, which I do, then it gives you kind of a visual to think about what the potential moves could be in the next couple of years.
Mm.
And so this was the last one just on electric vehicles. And so as we think about how this is evolving, one of the issues has been charging stations. And so this I thought was an interesting look to say how far we've come and how quickly it's been evolving. And so from a charging station perspective, the four major states, kind of the richest GDP states, which would be California, Texas, New York, they'd have the highest concentration of EV charging stations. And it's growing quite quickly, and it's interesting to see how quickly this is going. This actual chart, this Visual Capitalist is a great website. And if you do want to look at it, a lot of these are actually free charging stations, which is hard to believe. But so as we think about how it's going to evolve, I thought this was a great visual to look at the U.S. and see how they've been moving forward on their charging stations.
Very neat.
Mhm.
Cool. Okay. Just a brief look ahead here. What are we looking at for next week?
Yeah, so I'd say just a couple of things I wanted to hit first on just Elon Musk officially took over Twitter.
Mhm.
last night. So that'll be interesting to see how that evolves. That's been a ebb and flow. So Twitter has been a really good source of research over the last couple of years. So it'll be interesting to see how he changes it.
Mhm.
As for next week, as I say, from the 70% of S&P 500 companies have reported now. So most of the big companies have, and so it'll be interesting to see how they play out as their follow through from here. And so I'd be watching that.
Okay, great. All right. Well, that's it.
I'd say from our week as a team and for the clients, we put a real positive thing this week. We put an offer out to an associate to join our team, and she's accepted. So that's excellent news, and we'll have more info to share as that comes out.
That's great news for everybody, right?
Yes,
It's
indeed.
another body to provide service for the clients.
That's right.
That's exactly right. Love it.
Yep. Yep.
Well, as your dog walks around behind you there, we'll thanks for tuning in, everybody, and we'll see you next week.
Thanks, everybody. Take care.